I I understand. I know when I was talking to Madam President a couple of weeks ago, I told her that I anticipated that we were going to have lots of questions and maybe many challenges, and just from some feedback that I had gotten from some of the some members, that I thought we needed to have something in the form of maybe um, a refresher. I think that's what Robin actually had coined our meetings, in the off month, that we could actually recap or maybe refresh and retool for anybody that needed some extra help with the assignments on the off month, is just offer a little bit of extra help for anyone that needed it. And so that's what we're going to begin to offer. And we are going to actually come back to basics and actually, start from the beginning. And you'll see that coming up next month, uh, from the start, and come back to the basics of just starting all over. This is the football. So we're going to reintroduce some initial concepts and just really start building from there. Okay. And so with that, I want to kick it off really to Justine, to kind of just let us regroup, help us a little bit. And then I want to actually have some time for some questions of where maybe some of you all are getting stuck, so that maybe we can move through some stuck points. Okay. Unless, Justine, you think we should start there, but I'm going to leave it to you.
Okay. So what I want to do is just go back and go a little bit more in depth about cryptocurrency and how to purchase and what to look for. And then hopefully that'll answer a lot of your questions, but I am going to leave a lot of time for you to ask whatever you want to ask. But first, there are going to be a few different websites I'm going to be going to that I think are very helpful. So I'm going to put those in the chat right now so everybody has them. And we'll go over all of those. So let me go ahead and get started. Let me share my screen. Okay, so can everybody see this? Can everybody see the screen? So YouTube screen? I
Yes.
think I'm sharing. Okay. So shameless plug. I started writing, creating videos about cryptocurrencies with a few other Morehouse and Spellman ladies. And so this is just to, we're going to be putting up 4 videos a week. We just started, and we'll be going in depth on everything about cryptocurrencies. So this is something you'll be able to go back to and refer to a little later on. There are a few things that we're going to talk about tonight that you can use, but you'll see about 4 or 5 videos go up every week. So let's just get more so into really what are cryptocurrencies. I'm going to leave this up. I'm not going to show it necessarily. Well, I'll go ahead and put it in the actual presentation mode, make it bigger. So in order to truly understand cryptocurrencies, we first need to understand the difference between a centralized and decentralized network. And this will kind of help you better understand, and better have a better understanding and more confidence in cryptocurrencies. I think I saw before I get started, Kimberly, did you have your hand raised? Did you have
I
a
did,
question?
but I see you included the link to the YouTube channel. I was just going to ask what the link for the YouTube channel was, but I got
Oh,
it.
okay,
Thank you.
thank you. So, as we all know, right now, the federal government, the Federal Reserve Bank is like our clearinghouse. All other banks refer to this ledger that they keep. So every time a transaction is made, a ACH transaction is made, and one bank is sending money to the other one, the federal government's clearinghouse will record that information. So we kind of have an understanding of that. Now, the difference is the blockchain network, which all cryptocurrencies are on, they are on a decentralized network. So what that means is that there are computers around the world in every blockchain network that each have a ledger. So there are thousands of computers and they have the same ledger. So you might say, okay, well, what if one computer goes down, or can you actually change the ledger in one computer and update, yourself to have 1 million Bitcoin, for example? And it's not possible, because the way this works is every computer has the same ledger, but in order for the ledger to be changed, it has to go through what they call SASH, or a security protocol. And what this is like a 256-bit key that has to be verified in order for the ledger to be updated. So I think you all may have heard of things like mining, cryptocurrency mining. And basically what happens is, if I want to send $100 to Robin in cryptocurrencies, in Bitcoin, for example, first, what would happen is the network would verify that I actually have $100 worth of Bitcoin in my actual wallet. If that's the case, they would create a security key. And in order for the ledger to be updated, the actual answer to that security key would have to be discovered. And that's basically a long algorithm that has to be figured out. And there are computers around the world that are just mining and just running script after script after script in order to figure out what the answer is, and in order to basically approve that transaction. And they have to show a proof of work. If that is successful, then the computer that actually did that work or mined it, they get a small portion of the Bitcoin. So the ledger can't be updated just by changing a line. Other computers on the network have to mine and figure out what that key is in order for that transaction to be approved. Once that transaction is approved, it actually goes, all the other transactions are actually updated in the ledger. And I just want to show you something, because we can actually see this ledger. These or see the transactions. And this is all public information. So these hashes or these transactions are all made available, so we can actually view it, and it's a public ledger. So for example, this hash actually, or let's look at this one, for a transfer of $2,800. Here's the hash information. It's continually updating, but we can actually see that public information, that public ledger. So in essence, it's considered to be more secure, because if, for example, someone hacked into the Federal Reserve, and if it's not secure, or if any government has one ledger or one centralized system, that really does offer a lot of security problems. But with cryptocurrency, with the actual blockchain network, this is public information. Now, the private keys are not shown, but the actual transactions and the hash, the public part, is available, and ledgers around the world actually have the same copy of information, so it's harder to crack. That's why cryptocurrencies are so amazing, because they're actually very secure in that manner. So this is what I just described to you, is the blockchain network. The blockchain network is a decentralized network where computers around the world share the same information. So now we have that in mind. We have to understand the difference between a coin and a token. And here you see we have two parents, and then we have the little children. A coin is what I consider to be the parents. Tokens are children. And it's very important that you remember that, because that's going to help you to identify the value of your cryptocurrency. If you ever have problems remembering that, I'll give you an example of something that might help you. I used to go to Showbiz and Chuck E. Cheese when I was little. And remember, we had to actually convert our coins or dollars to tokens. They were not real money. They're plastic pieces, if I remember, or they might have been metal pieces, but they were tokens. So if you remember, tokens are children play with tokens when they go to Showbiz or Chuck E. Cheese. That'll help you remember. So the way coins work are, a coin actually has this decentralized network. I mean, so for example, Bitcoin is an actual coin. It has its own network. Ethereum is a coin. It has its own network. XRP or Ripple is a coin. It has its own network. There are tokens that are created and share the resources of the coin's network. So for example, Ethereum, a lot of the tokens that are made on Ethereum's network. So basically what they do is they share the actual resources of that blockchain technology. And that's very important because one thing we might want to consider when we're trying to evaluate whether we want to invest in a coin or a token is the longevity of that particular cryptocurrency. Coins will, because they actually have their own network and they have more of their own resources behind them. Those are more stable than a token. You could, if you actually go to YouTube, you can look up YouTube videos and you can actually develop your own token in about 20 or 30 minutes. And a lot of people, what they do is developers will get together, they'll create their own token, they'll invest a little money in it, put some hype behind it. Other people buy that token, and then they do what they call a rug pull, where they pull all of their money out of the token and the token goes into nothing. So I say that because if you're looking for a long-term investment, I would invest in a coin over a token. Coins have their own network. They're more stable. You're not going to build your own blockchain network around the world and most likely just do a rug pull and pull all the money out of it. But we'll go over that a little further in detail in a second. But does anybody have any questions about what I've gone over so far? Okay.
Good question in regards to the, you mentioned coins have their own decentralized network using blockchain technology.
Right.
And tokens, I'm assuming, don't have their own decentralized network, or do they? And if so, I guess, does their network use blockchain technology?
Tokens they share the networks of coins.
Okay.
So that's why tokens are children. Children live in their parents' house. So tokens, I can make a token on Bitcoin's network and I can share their technology in their ledger in order to create my token. So basically I'm using their blockchain technology and I'm just like adding a slight variation to call that particular technology the Shastine token or whatever token you want to call it. So what I would do is the way tokens are created, let's say they would technically purchase, let's say I want to start a token off with 500 Bitcoin. I would code it and make it worth 500 Bitcoin, my token. And when you have to actually purchase that particular amount of whatever the technology is, if it's Bitcoin. And then, so that would be labeled the Shastine token, for example. And then that Shastine token, those particular variations of the Bitcoin coin would be considered the Shastine token. So then I could either keep that money or I can sell that, or I can get other people to invest in the Shastine token, for example, that's on the BitChain, the Bitcoin network. Does that make sense? Did I explain it clearly enough?
It does make sense. I guess I'm just having, I guess I'm a little confused as far as the differentiation, in the sense that the difference between tokens and coins, if they're using the same technology, if this using blockchain, because they're being, I guess, verified the same way. I'm just trying to wrap my mind around what the biggest difference is if the same technology is being used.
From a security perspective, it's just as secure.
Okay.
but the stability of the company. So if someone invests in my token and then I all of a sudden pull all the money out of it, let's say the token goes from $1 to $10, and let's say I have 80% of all the tokens and people start to invest. If I pull all the money out of it, and I can just, as the token owner or creator, I can close the token, just that simple.
I see.
And everybody would lose their money. But see, Bitcoin is its own blockchain network, and it is actually, not technically a security, but it's a product that people buy and sell. So it's less likely that they would actually just take it and run. It can be done, and there's so many people that have invested in it that it's highly unlikely now because there's so many different investors. But a lot of times what happens is people will purchase or create a cryptocurrency or a token on a blockchain. Most of the times it's Ethereum, and I'll go over why later. On a blockchain, let it rise, get hype around it, and then because they own the majority of shares, they would take all their money and run.
Okay.
And because it's not their own network, then there's no real work behind it, because it only takes about an hour, 15 minutes to create one, and then they put the hype behind it.
And
that's why.
Just so I'm clear also, so as far as coins versus tokens, I would say as far as the barriers of entry are extremely, extremely low. Whereas
Extremely low.
a coin, it's not that low because you have to have the mining equipment and
the network.
The network. So, okay. So the barrier to entry is exceptionally low, which makes it extremely unstable versus a coin.
Right. And the amount of money that you invest in creating that network is a lot different than, just a couple $100 that you would even put into creating a token. So yes,
perfect.
That's a perfect way to describe it.
Thank you.
Interesting. Chestina, one other question regarding that. You mentioned Bitcoin, but there's a lot of other coins. Do they all have their own type of network? So for instance, Ethereum would have a different network than Bitcoin and that type of thing. Is that how that works?
Yes, the coins have their own network. They may vary slightly, but they have their own version of their blockchain technology. Yes.
Okay, because that's one of the challenges we were having a little bit is, evaluating these different coins. Like how do you, all the prices are going up and down and, are fairly volatile. We're having a little bit of a challenge in determining how do you decide which of those to invest in given the volatility of all of them.
Yes, and we're the perfect segue into this next part because we're going to go over that right now.
Okay.
So if you can see my screen, it says evaluating the cryptocurrency. So we're going to figure out how to evaluate a cryptocurrency. The site that I'd like to go to, and I sent you that link, is Coin Market Cap. Let's see, let me get it on the right screen. Okay.
Was this the same presentation you went over before, or have you added on to it?
I've added on to it and
Okay.
changed a little more. Yeah.
Okay.
I'll send this one to you.
Okay, perfect.
So CoinMarketCap is the place to go. This has been out since 2013. It is the oldest site with all the trending information and all the prices and rates of all the cryptocurrencies. And it allows you to do a deep dive into the cryptocurrencies. So I always go to CoinMarketCap and first of all, I look at the top 10. Let's just look at the top 10 so I can go over, for example, how I would evaluate it. So let's look at Bitcoin. So if you see here, it says coins. Bitcoin is actually a coin. It'll tell you at the top of these whether or not it's a coin or a token. Most of the cryptocurrencies in the top 10 are actually coins. They're not tokens. So I'll let it load its data. But one of the things that I look at is, first of all, I look at the max supply and the total supply. And that's the max supply is always in the top right corner. And I look at the total supply. And the reason I do that is because with Bitcoin, they're only making 21 million Bitcoin. After that, they're not making it anymore. And that lets you know that, as we reach our max supply, you can expect that particular product to actually increase in value. Now, a lot of coins do not actually have a max supply. Ethereum doesn't have a max supply, It's a coin though. The reason I think Ethereum is good is because though most of the tokens are created using Ethereum's technology, partially because Ethereum is it's cheaper, and so that makes it cheaper to put your initial investment in, but also because of the security around it. They slightly modified Bitcoin's Bitcoin's technology, but Ethereum, it's just really taking off, and I really think it's more so because of the price. So it's not that difficult to actually get into it. So I look at the max supply and total supply. So because Bitcoin is almost less than 3 million away from its max supply, we know that we should expect it to go up. I also look at the volume. Now, Bitcoin has been traded in the last 24 hours, $19 billion worth of it. And the reason I look at that is because I want to make sure that it's liquid enough for me to get out. Anything to me under 10 million or $100 million worth traded in the last 24 hours, if it's less than that, I don't mess with it. I would probably say with these, if it's less than $100 million traded, I wouldn't mess with it, because it gives you, because like I said, you want to be able to pull your money out if you have to. If it's not liquid, then you can't do that. Now, one thing that CoinMarketCap does is it has white papers and more details about that particular currency. So I can go to bitcoin.org, I can read the white paper, and most of the coins have white papers which describe in detail the technology. And if you want to actually look at the white papers and create your own blockchain technology using that information, you can. And so I also go to the communities, like they have Bitcoin Talk, Reddit has its own community, and I just read. Most of the top 10 cryptocurrencies will have their own community. If it doesn't have its own community, I'm a skeptic of it. If they aren't marketing it, and I haven't really heard of it, I'm like, I don't know. If I go to their website, and it seems like it's a little slow. If I go to their website, for example, and I can't find information about it, like information about who created it, Bitcoin is different because this is the first real cryptocurrency. But if I can't find information about the developers of it, or if I can't find just pertinent details, as if you were actually researching a company or a stock, if you can't find that, then don't plan on putting your money into it in the long term. Coins, you can invest in those in probably the long term. Tokens, it's something that you may want to get in and get out of. And then I also look at the all-time charts. Of course, I always try to buy low. I look at the charts overall and compare them to, where the product was a year ago, 2 years ago. Bitcoin, if I bought Bitcoin when it was $74, I probably wouldn't be on the call right now. So, just consider some products are actually going down. So just kind of look at where they are. Now, let's say you wanted to get into an interesting product, what's one of the new hot ones? Well, I have Shiba Inu. So let's look at that. Now, this is a token. Shiba Inu is a token. And you see here it says that it's a token at this top right corner. Top left corner. Now, Shiba Inu is worth less than what? It's very low. Less than not even a 100th of a cent. One of the sites that I go to determine whether or not I want to actually invest in something is I try to determine when I can get out and how much I can make if it goes up a certain amount. Now, I'm invested in Shiba Inu, and I actually is ranked 14. I think when I got into it, it was ranked like $100 or $200. 100 or 200 as far as on the CoinMarketCap scale. The reason I got into it is because, number one, it had a lot of hype behind it. I actually researched it on Shiba Token and a few of these other communities. Twitter and read about it, and I saw that it had good hype behind it. Now, it's not something I plan on being in the long term, but I was able to quadruple what I put into it. It failed. It had gone up to 4 zeros and 7. It fell a little bit, but I was able to see the potential. Now, there's a site, and I did include this site here. It's called the Coin Profit Loss Calculator. And this is one thing I do when I look at everything. Let's show you Shiba Inu, for example. What you do is you actually select the product that you're interested in purchasing. It will pull in the initial coin price, or the price that it is right now. Let's just say I put in $100. And the investment fee, these are fees that you are like fees that you incur to get in and out of the product, and they're charged by the exchange that you use. I usually put 3%. Sometimes they can be a little more, sometimes they can be a little less. So let's say I bought $100 worth of Shiba Inu at the current price. If it goes up to 10 cents, I would make $300,000. Now, will it go up to 10 cents? It might. It would be great if it does. But let me tell you, Shiba Inu started with like 8 zeros behind it. So it's very well possible. I don't see anything wrong with putting $100 in it and just seeing what happens. But this is not something that I would invest in over a long period of time. Now, there are a lot of different up and coming coins that are out there that you can do the same thing too. You can, let me show you. You can actually go to this list. You can research it. You can see, and there are thousands and thousands of cryptocurrencies. You can go to look at the top 10, the more up and coming, look at the biggest gainers, for example. I've never heard of any of these. Catcoin, no one. These are some of the biggest gainers. Current price, for example, let's see, the volume is 2 million. Current price is what, 1 cent. Oh, I'm sorry, that's verified. This current price is what, 6 zeros behind the cent. And it's gone up, but it's less than $131,000, but of a volume in 24 hours. But there would be nothing wrong with putting $10 or $15 into it and just seeing what happens, as long as you understand that you're not putting your retirement money. And this is something that you would probably invest in like you're going to the casino. If you make it, you do great. If you lose it, you had planned it on, it's a possibility that you lose it. It's no big deal. These coins, and they also call these coins altcoins because they're not the most popular ones and they're big risk. But what people have done is they have taken $2,000 or $3,000, invested in an altcoin, waited for it to go up and pull their money. And they've tripled their money and quadrupled their money. And seeing how I've invested in Shiba Inu and some of these other ones, it is possible. But this is like loaning somebody money. You understand that you can lose this money. So you don't give you don't give what's important to you, but you can make money from this if you understand how it works. So what you would do, you look at the community, look at what the hype is behind it. For this one had gone up to what, 10 to the minus 5 zeros, 37, whatever, I don't know how to say that, but and it fallen in half since October. So if you had gotten it then, and this is an example of something that could be possibly have been a rug pull. If you look at it, it started off low, jumped up in less than 2 weeks, and then the original investors probably pulled their money out of it. And now it's low. It might go back up. It's starting to go back up, but when it jumps up initially like this and it falls tremendously, this is something you might want to say it's dead. It's probably not going to go back up. You're looking for something that has continual gains, not necessarily something that goes that's gone up and hit its peak and just gone flat. But this is just an example of something. But that's how I would look at that. I would just pay attention to the overall charts. I would pay attention to, again, the history behind it. Let me show you some of these. And please ask any questions as we're going through these. Now notice, this is called Cat Coin, but you see it's a token. So just because it has coin in the name does not mean that it's actually a coin. It's a token. So let's see. So I would go to their community. And then if you go to their website, catcoincrypto.net, I like to research the developers and the company behind it. Some of these tokens are really good because they actually, they're used to raise money for different, different social interests and, different nonprofits, and some of them support different technologies. I wonder if Catcoin, and I'm not going to look at this now, is supporting cats. I have no idea, but you research the company just to see if it's somebody that made it just to make a few dollars. They don't have much here about who created this, who are the developers, who put the money behind this. So I'd be like, I don't know. If I just want to make some money real quick and maybe invested in it for a day or two, that's something I would think about. Let's see. If we go back, again, most of the top 10 are the most stable. These are the ones that most of the top 10, you have to look at it, are actually coins. Now, something like USD coin, this is a token, it's not a coin, but it's called USD coin because it's a token that's that follows the US market. And a lot of people use it to actually go from one token to the next. So the way it works is you just can't necessarily buy a token or off some of these exchanges without having something to convert you from like the Binance coin to US dollars, or US dollars, sometimes even Bitcoin. So some of these exchanges will allow you to use USD coin as an intermediary to jump to another token or another coin. So just FYI, USD coin follows the US market and it's always going to be close to $1. Okay, really quickly, let me show you one more thing. If there are no questions on what I kind of do to evaluate the market, it's pretty much based off of what your end goal is. If you want to be in something long-term, get something more stable, a coin that has a lot of technology behind it, that has investors that are known, that has white papers that actually make sense, that has been around more than a few years. That's something that you would invest in long-term. If you're trying to just purchase something to get into it and you're trying to day trade, or you're trying to be in it for a week or two, you can take your chances on the altcoins or the coins that may be here today and gone tomorrow. But I wouldn't suggest putting my last dollars in it. I would trade in it like I'm trading at the casino. If I lose it, I lose it. If I don't, that's great. One more thing, another site I want to show you. CoinMarketCap has what they call a cryptocurrency converter. So if you want to see, for example, if I wanted to see how much Bitcoin I could buy with 100 US dollars, you can actually convert that. So that way you kind of know how much you can buy before you actually purchase it. They have everything from gold, silver. If you want to actually trade a fiat currency, fiat currencies are similar to cryptocurrencies. They actually came around the same time. I'll have to go over that in a little more detail later, but they're not quite like cryptocurrencies. Precious metals, you can do all types of conversions. And then they also have some of them that are, like quick links if you want to actually click on it and do a quick conversion. If you have a conversion and you want to save it, you can actually save this and come back to it later and include it in like a document or something if you wanted to send that to someone to see how much you probably need. For example, if you wanted to exchange a US coin, a US dollar to Bitcoin. Let's see, have I gone over? I think, one last thing. I wanted to show you, we talked about scam coins. And so I wanted to show you really quickly how to scamsniper.net, coinsniper.net. It will actually do a quick overview, it will kind of research a coin, and it will tell you if that coin is most likely a scam or not, or that token, not coin or token. So let me show you this and show you how to use it. I suggest that you use this as well. So what you do is you search on the coin. So there's so many coins. I'll just type in something. Let's see, I'll get something from one of these pages. What coin? We can say, let's see, let's try one of the new coins. Okay, green chart. Let's try green chart. So what you do, you actually put the coin in, and hopefully they have that. And you search for it. And by coin, I mean cryptocurrency. I'm using coin interchangeably right now. The coin or the token in, you search for it, and it'll bring up information about that coin. And then you click on right here, scan on Scam Sniper, and it'll tell you if this has been listed as a scam. So you click on it, and they'll most likely show you a little ad and go through Cloudflare, but it will eventually come back and tell you its confidence rating on whether or not that is considered to be something that people have reported as being a scam or not. And so you see, for example, green chart is considered medium risk. I have seen some of them that are high risk, but it's considered medium risk. I wouldn't mess with it. But that's just another resource that you can use to determine whether or not you want to actually invest in something. One last thing, Coinbase. I went over Coinbase last time. Coinbase is one of the more reputable exchanges. And just FYI, they usually don't have high risk coins or tokens on their page. So if you decide to buy something from Coinbase, it's most likely pretty safe. In order to actually purchase on Coinbase, you just click on, you have to deposit money, and then you just click on buy and sell. And then, oh, I must be logged out. Oh, 1 second. It does this every now and then. And then you just select the token or coin that you want to purchase. You can even purchase with PayPal, which is really cool. And then it's really, really simple, because I want you to be comfortable. This is not something you have to be afraid of, but it is something that you need to be cautious of. Even when you're investing in stocks and all that, the businesses can always go under as well. So it's just not as likely. There is no oversight committee. We don't have the stock exchange. This is something that they're not, the SEC. So overlooking these. So you have to protect yourself. But sites like Coinbase, Robinhood, those types of sites usually have more reputable cryptocurrencies on.
Hey, Justina, I do have a question. I noticed that if you do Cash App, that you can actually buy crypto on Cash App. Would you suggest that, or through Cash App?
I don't see anything wrong with that. That's actually, it's going to be easier. Now, some of the exchanges will not accept credit cards, and just FYI. And so if Cash App makes it easier for you to actually purchase. Some of the exchanges, like even Coinbase, for a while, they wouldn't accept credit cards. Well, the credit cards, they would accept credit cards, but the credit cards would decline. That's one of the things that you will come across if you use different exchanges. Your credit card will a lot of banks right now still are kind of weary about cryptocurrency purchases. So if you do happen to come up in on a situation where the credit card is declining the purchase, then what you'll have to do is, what I did is I opened up a credit union account, and I put a few $100s in it, and I used that to actually purchase cryptocurrencies, and I just transfer money as I go. Credit unions are not as they're easier to get the transactions through. Credit unions work. Credit unions like PenFed, Delta Community. There's so many credit unions. I think there's like a credit union search out there that you can do. The majority of credit unions will work. And I opened up a separate account because I didn't want to link these to my real bank account. I'm not trying to scare anybody. I'm just trying to protect you. But the good thing about Coinbase is that you could actually pay with PayPal. So, and PayPal will approve it. So that's kind of cool. And you just put your whatever you want to purchase in, and you can actually choose what you want to buy or sell. Just clicking on the drop link if it actually opens for me. Oh yes, I can actually choose what I want to buy or sell. And most of their coins or tokens are actually safer. They have a lot of them in here though. And you still have to be careful with all of them. But they're usually like the top 100.
So sisters, I want to make sure that with the time that we have left, which is really right at like 17 minutes, is that whatever questions you have on this assignment that is due next month, the third week, the third Wednesday of March, for your cryptocurrency purchases, that you have whatever questions. So no question is, too silly, not smart enough, whatever your stuck point is. I want to make sure that you do get your question. If you need to put it in the chat, if you need to text me, text it to me. I'm happy to ask, the question for you. But, I want to make sure that you use this forum to ask whatever it is that you need to ask. A couple of things that I heard Justine mention, that I don't think that, yes, Justine's presentation is going to be available, the updated presentations with all of the links. If you didn't get them from the chat, I encourage you to please grab them if you can, write them down, jot them down. But if not, Justine, if they are included in the presentation, I will drop them in your folders in Google Drive so that you do have them, okay? So I want to make sure that you do know that. But look, Justine mentioned that there is no recourse. So you making sure you do your research with all of these different links that she's provided, that's really, really important. Now, yes, your commitment to the investment club to yourself is $100 a month, right? And so it's an amount that, hopefully is not really breaking the bank in any way. You're not committing, your retirement to the investment club, but also we want you to be prudent investors, that one of the biggest takeaways is that you are learning how to research different asset classes, which we are including crypto as an alternative asset class, but learning how to research, right? How do you look at crypto in a way where you can actually figure out what to invest in, right? There's no recourse. You can't go to arbitration. You can't contact the legal department of a broker and say, hey, I bought this crypto and I think I made a bad move, because, it's decentralized for a reason, right? And so all of this is made so that you can go and research, and Justine has put all this together so that you can make the best decision possible in your decision for this next coming month. Okay. So thank you, Justine, for that. I appreciate that. So Simone.
Yeah, hi, thanks a lot. This has been extremely helpful. I think hearing it a second time. So I appreciate you going over this with us. But I do have a question about Ethereum, because our team, we've been discussing Ethereum and blockchain quite a bit. And I'm really interested in Ethereum, trying to understand. I know you said that it has its own network. It's a token. And many of the other tokens use its network, but it does not have a maximum supply. So I guess I'm trying to understand some of the main differences between Ethereum and Bitcoin. We were actually interested in both. I'm more interested in Ethereum simply because I know a lot of the other tokens use the technology, but what makes it different than Bitcoin, though, is what I'm having a tough time understanding. Or why doesn't it have a maximum supply?
Well, they didn't create it with the maximum supply because they wanted to, they say that it's, they're using it for security and banking improvements. So the technology was supposed to be for, I guess, to further blockchain along. And so they decided not to create a maximum supply. It's
Okay.
one of the second, I think it's the second or at the top
Yeah.
that was created right after Bitcoin. And so they didn't want to put a max on it because they have all these other technologies that they say that they're bringing to the forefront with Ethereum. And they've done a lot as far as, you know, making it accessible to, you know, for other tokens and all of that. But Bitcoin also, with its lower price, has made it easier for people to get into. I think Bitcoin, in my personal opinion, and I'm not a financial advisor, you know, this is for educational purposes only, but in my personal opinion, I think that Bitcoin Bitcoin and Ethereum are the safest ones you can get.
Yeah.
Ethereum has so many tokens on its network, and a lot of different companies actually use Ethereum. One thing about Bitcoin and Ethereum, Bitcoin, you know, some countries are actually using it as their main currency. And Ethereum, a lot of companies are actually using that and building technologies with that blockchain code. So Ethereum, I think, is a safer bet. If you want to get something cheaper than Bitcoin, I think Ethereum is the place is where you can go to.
And Justine, just to be clear, Ethereum is a coin and not a token.
It's a coin and not a
Correct?
token. Yes.
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 Thank you.
Jennifer, I have a question.
Hey, Jackie. Oh, wait, who was that?
Can you hear me?
Oh, hey, Tina. Yes, go ahead.
Can you go over what's supposed to be in the presentation specifically? That's I'm having trouble finding that in writing.
Yeah, so in your presentation that you're supposed to cover, you're supposed to go ahead and just talk about, you know, what you researched, right? And so that could be that your team decided in this specific example that you decided to take a look at. You should at least have two things that you're comparing, right? At a very minimum. Some teams choose more than two things. Some choose five. It just depends on how they split it up, right? But at the very least, you're comparing at least two different options, and why, you know, you chose one over the other, right? Your process for why you chose, you know, maybe in this case, Bitcoin over Ethereum or Ethereum over Bitcoin, what that process was for doing so, right? So you're going to go through, okay, this is why. It was the pricing, it was the volatility, it was, so you're going to go through the research process that you went through on deciding why your team decided to make that investment, you know, when you compared whatever your choices were that you all decided on, okay? And then that process of doing so. So in your resources folders, you should see an example presentations that will go through in your Google Drive folders of what that looks like, right? So you would have some presentations in there that show you what that looks like. And so some teams will show competitors, you know, will show a SWOT analysis. You know, I'm just going off the top of my head because I don't have that in front of me, but you will want to compare it to something. You will want to show, you know, talk a little bit about your research. We've been really lax on, you know, presentation times. You know, it's supposed to be about 5 to 6 minutes per team. Teams usually take about 10 minutes to present. But just going through that, I encourage you to go through your Google Drive folder to see the examples that you have in there of, you know,
And Jennifer, I did look at the examples. It's just a novice who knows nothing about financial stuff I did not know what I was looking at to know what needed to go in the presentation. So I don't want you to think I didn't look at it. I've
I gotcha.
scoured the entire drive, but it did not make sense to someone that does not know financial stuff.
Okay.
And so this is helpful, you talking it through.
Yeah.
So I appreciate that assistance.
So
Um,
hopefully in Dina, and just talking about the stuff that really Justine just went over, even if you guys just wanted to take a look at just those two coins
Mhm.
that she mentioned, Bitcoin and Ethereum, just to make it easy, just using even some of those links of, okay, this is how we would compare it. Okay, let's look at, let's go through coin market cap, right? And let's do that. Let's go through, what was that scam link that you had, Justine?
Coin Sniper. Yeah,
Coin
Sniper.
Sniper. So just going through that process, right? And doing that, but it doesn't have to be you all going saying we're going to choose 5 different coins and splitting it up that way. You can do as little as 2 different coins in this, or 2 different competitors, and then going with the one that feels best. Look, in investing, the biggest thing is from my perspective is, one, trusting your gut. I think as women, we our gut is something to be trusted, right? I think we make the better investors when you peel the onion back. And so doing that, but also, putting the work behind it. This is why, the numbers show this when you take a look at it. Ethereum has traded this much in a year's time. This is how many, Ethereum coins have traded. This is how much volatility it's had. This, it's had less volatility than whatever, or it's had more, whatever, and whatever you show, it's whatever substantiates what your gut tells you to do. Okay.
Thank you.
And Jackie, go ahead. I know.
I just had a question that's a little bit, I guess it's related. We have used Stash as our trading platform in the past, and Stash has a number of crypto, I guess they're called trusts. And so I was wondering if you'd had any experience, Justine, with trusts or anything like that, or if we should just stick to just the regular cryptos.
I don't see anything wrong with the trust. There's if you don't, and this is up for Jennifer to let you know if that's okay, but if you all don't want to invest directly in crypto, there are stocks that are related directly to cryptocurrencies. There, if you look up mining companies that actually have servers that mine the cryptocurrencies. We spoke about the mining, so there's companies that made millions off of doing that. There are companies, one is I Trust Capital. They actually allow you to now invest your retirement into Bitcoin. And so now they're worth billions. There's another one, what is it? CoinDesk. They are an exchange. They're about to go public right now. I'm not sure when, but soon. And they're worth like $6 or $10 billion. So there are other ways that you can actually get into cryptocurrencies without actually purchasing cryptocurrencies if you just want to, get something that actually moves with the cryptocurrency market. I think, and Jennifer, you could speak to it more because you talked about it a little bit last week.
One of the things we talked about in in many of our assignments is that there is flexibility in that. Okay. And so when the assignment was crypto, we said you could directly invest in cryptocurrencies, and you could do something different. There are some crypto ETFs that are available that you could invest in. So a couple of investment companies, investment management firms have some crypto ETFs. There are crypto stocks or crypto adjacent stocks that you could invest in, right? You could invest in some blockchain technology that are sort of adjacent, that help, so it's very, very fluid. I don't want to give you guys too much, but look, you may not feel comfortable necessarily Cryptocurrency yourself, you may not be that comfortable with, and I get that. I have a lot of clients who are like, look, it's too much. I don't want to learn it. And I get that. So why don't you could do something adjacent to it, right? And invest in so if you Google crypto adjacent stocks, you will get a list of companies that will pull up. And so that may be more comfortable. A lot of you all have invested in stocks, you've done research in stocks. And look, the process to do that is what you've done for stocks before, So if that makes you feel more comfortable, you are still in alignment with the assignment, okay? And go for it, okay? It's about the process. And so I get that. So yes, there's no right or wrong answer as long as you are crypto adjacent, I will say, okay? And so I get that. This is a little bit different than what we've covered, but we want you to, it's about the process. We want you to learn a little bit about a lot of different, asset classes, really, Jackie. And so, yeah, so there's no right or wrong answer. So that was great, Justine. I'm glad you mentioned that.
Thank you.
Yeah.
Justine, I do have another question, if that's okay. In our group, we talked quite a bit about just having the comfort level with which platform we use to put our initial money into. I know some of us are probably a little bit more seasoned with crypto. I used Robinhood only because it's got some kind of presence. It has a market presence, and I wasn't necessarily comfortable tying my account with something that I just wasn't, very knowledgeable about. Like you said, you were using a credit union. So I guess my question is, I know you talked about wallet, and that was one of the things that we were talking about within our team. Well, do we need a wallet, or, talking about the security? So it helped that you explained that. So some of us used, I forget, one of the girls on our team used, I can't remember the name of it, but it wasn't one of the more, it was one of the more Coinbase type platforms. So I guess
SoFi.
No, it wasn't even SoFi. Do you remember, Kimberly? I don't think she's on. I don't think
She posted SoFi.
Yeah, I use SoFi. I know
it wasn't. It was Cameron. Cameron used.
She used Cash App, I believe.
Oh, I thought she used another one too.
She may have, but I do recall her saying
my question is
Coinbase.
Right, Coinbase. So my question is, like, for example, I used Robinhood, and then I also used both of them. I used Robinhood. So as far as, we don't need a wallet or anything, I'm assuming, if I want to pull my money out in 3 months, I don't have a problem pulling it out and getting my cash back, correct?
Okay, so that depends on where you buy it from. So with Robinhood, it's like cashing out a stock. You get your money back. It's simple.
Okay.
The way they work, the more reputable ones, they have online storage and they have offline storage. So online storage, when you buy actual cryptocurrency through them, like Coinbase or like Robinhood, they keep your keys for you. So if you did like a trust wallet, which is a wallet that you just have on your phone, you have your own keys and you have your own information. If you lose it, you lose it. So there's different types of wallets. I think it's best to do an online wallet. Now, let's say tomorrow let's say you bought $100 in a certain coin, and then tomorrow you look up and it's worth 100 million. With an online wallet, you most likely have to cash it out. But there are some wallets where you can actually take your keys and download them to it's called a ledger or a Trezor. Those are like and I've gone over them last time. Those are like USB drives to a certain extent, and they actually hold your keys for you, but you cannot lose them or else you lost your money. It depends on what your exit strategy is or how you want to keep those. But companies like Robinhood, Crypto.com, Coinbase, they say that they insure your money, where, I mean, cryptocurrencies themselves cannot be insured, but let's say they're hacked and all of their keys are taken, they are insured that. But I think it's better, if you're new to this, to get a wallet that has feet in the United States that have to follow certain regulations that do things other than just cryptocurrency. Unless it's like one of the larger ones like crypto.com or Coinbase. But like Robinhood, they have stock. So they have some of the same security protocols, and they have to go along with some of the SEC regulations. Those type of companies that have that standard practice with that they can also apply that to cryptocurrencies.
Right.
If it's something that you're new to and you just want to feel safer in doing
Okay.
so.
So I would have no problem if I decided 6 months from now to pull my money out. Whatever the value is at that time is what it is, but I would get my money back going back
Yeah.
into my account, correct?
Yeah, with companies like
Okay.
that, you will. Now, everybody, I can't say that's the case, but companies like that,
Yeah,
the reputable ones, yes, you will,
that's what I thought. Okay.
because
thank
they're
you.
in the United States and they have to follow certain regulations.
Right.
And I want to be mindful of the time. And so I appreciate you ladies for getting on. If there are any follow-up questions, anything that comes up, that you think about, after this call, please email them, and I'm happy to, help field any of the additional questions. Okay. Dina, if you need anything additional, please reach out to me. I did get your email. Okay. And I'm here to help. Okay. And that applies to all of you. So I appreciate you all, and I hope you have a good evening. And as soon as Justine gets her updated presentation to me, I will drop them in your folders. Okay. Thank you, ladies.
Thank you.
Thank y'all.
Christine, thank you so much.
Oh, no problem. Thank you. Have a
Thank
good
you.
night.
Thank you. Good night, ladies.
Thank you so much.